Nothing I share here is financial advice. This is all based on my own experience, my strategy, and how I see the market. You're responsible for your own trades, so always do your own research, manage your risk, and never trade money you can't afford to lose. This content is meant to help you learn and think for yourself, not to copy or follow blindly. Let's keep it educational and intentional. Welcome back to the channel. Let's see what we have. The higher time frame view is unchanged for now, and the levels remain the same. Of course, it takes time for all of this to play out, as it doesn't move as fast as on the 1-minute chart, so we will check these charts from time to time, but for now, nothing major has changed. So let's start directly with the yearly price time chart. Here we were watching the yearly time, specifically when price meets time. At that moment, price was moving down, and we were looking at this area for support. From there, we got our long, and price is now rising. By the way, we've already traded this yearly Fibonacci time-price confluence twice this year. And I don't know if you remember what happened on the first one, but I journaled it. On that move down into the yearly Fib time and support, sentiment was very bearish. People were expecting lower prices. That was the low of the move. Then we got a rise, followed by another drop into the next price and time confluence. Again, sentiment was very bearish, with people saying it would go lower or that it wasn't a good place for a swing trade. Well, price is now at 69K, so that turned out to be a good trade at the right time with the right sentiment. And over time, you'll notice how this repeats when price hits these price and time areas. Currently, price is trading inside a choppy area and is hitting some resistance. I think not many expect resistance here, and they are aiming to short slightly higher. But once price reclaims this area, the door is open to the next level. So for me, I will not short if price breaks above this area. What I am ready for, if it fails to break, is more chop, maybe a retest of the lower part, or just continued ranging before the next move. The lower zone remains support, and wicks into that area are fine. Only if that level is lost do we look for lower prices. Simply level by level. But once it breaks upward, I will look for higher. And with that, let's switch to the next chart, our range. We've been in this range for quite some time now, and honestly, it has been pretty nice to trade if you identified it early. Now we are entering the time window that we marked out earlier, the window where we want to see a move happen. The move started with the yearly Fib time, where the low was formed. That was our long entry. Now we also have the daily cycle and the monthly averages aligning with this area. So clearly it's a strong place to look for trades because price and time are coming together. My job was simply to identify levels of interest and trade them step by step. And yes, there was a reason why the first area was the mid-range. I explained that in Telegram. It wasn't random. There was a clear reason why this area was interesting for longs. And so far, we're seeing a nice reaction, following the plan we had drawn out earlier. Now, price is still inside the time window, and technically the lower levels remain areas of interest. But as long as this mid-range holds, I cannot aim for lower. Simple as that. And our actions confirm that because we took the long from that level. The plan hasn't changed at all. For now, I remain in the same trade, waiting for the next action, either taking profit higher or looking for a new trade. These phases can be boring and slow, but patience pays off. If you start jumping in and out of trades without a clear bias, you will most likely take multiple losses in this kind of range. Make sure you have a plan that gives you a clear directional bias so you can execute and then wait for the result. Because if you jump in and out emotionally, you might take 5 to 10 losses before the real move even happens. And if you're lucky, you might recover some of it. But if not, you lose everything. And I say luck because that's exactly what it is when you trade emotionally. You're trying to catch a lucky move instead of executing a clear, structured plan. That's the difference. On one side, you are emotional and unstable. On the other side, you are confident because you know what you're doing. You've tested it. Of course, many people are still learning and discovering new things, so it's not easy. But even then, you need to avoid jumping in and out emotionally. Anyway, let's move on to the next chart. Here we have the higher time frame levels and the 22-day cycle we marked out. Basically an area for bottom formation based on that cycle. Whether this turns into a longer range or not We'll see. But for now, price is trading inside this box and holding the area, which is not bearish in my view. Price is simply retesting the previous all-time high area, which is a very important level. So I'm not bearish at a higher time frame support that also aligns with data points. Overall, I'm ready for a bigger range, but I can't turn bearish as long as this area holds. And I mean bearish within this range, right? If that level is lost, then the door opens for lower levels again, structural stops on the left, data points like the power law, and so on. There are plenty of levels below, no doubt. But for now, this is a retest of a higher time frame level, so I'm more interested in longs, trading the range both ways, but with a bias toward higher prices until proven otherwise. So for me, I've bought some spot here, and I'm ready to buy more at lower levels or on a confirmed breakout higher. My spot position is already built within this range. Now let's have a look at the new momentum pivots. 3-month momentum. We had a new open, so the new number is around 100K. That means as long as price is closing below it, momentum remains bearish. On the quarterly time frame, it can take time to play out, so for now the key level is 100K. We'll revisit this either on a bigger move or at the next quarterly to see where the new pivot forms. On the monthly time frame, we have a new pivot at around 98K. That dropped significantly from the previous pivot around 115K. As long as price is below this level, momentum remains bearish. However, we are already on the lower side, so sooner or later, this should shift. For now, we've seen multiple bearish monthly signals without strong follow-through, as price is ranging. As long as this higher timeframe SR level holds, momentum can reset here. If it breaks lower, then we could see a larger move down. Until then, this area acts as support, and I'm mainly observing the monthly momentum. On the 2-week time frame, momentum is at extreme lows. That doesn't mean price can't move lower, but historically, when it enters this zone, it often marks a bottom formation. Sometimes price makes one more leg down, a final shakeout, before reversing. The pivot is around 66K, so if in 6 days price closes above 66K, momentum would start to flip up for the first time since the top. That's important because when momentum shifts back up from these extreme levels, it often acts as extra confluence that a bottom is in. Looking at past behavior, sometimes we get a longer range without a new low. Other times we get one final drop, then a strong move up. So I'll keep observing how long momentum stays below the extreme zone and how it reacts when it crosses back up. On the weekly time frame, momentum has crossed up and remains bullish as long as the weekly closes of 66K. This is similar to the 2-week time frame. However, I still want to see price confirmation. Ideally, price should break and close above the last high and above the value area low. That would open the door for a stronger move toward higher targets. Until then, it's still range behavior. On the 5-day time frame, we have bullish divergence, which remains valid as long as BTC closes above 66.3K in the next 4 days. And if you notice, multiple time frames are aligning around the same level, 66K, which makes this upcoming weekly close especially important. But again, all of this still needs a break above the last high to confirm continuation. My next targets would be around the 80K area and higher, and from there we'll reassess. It could turn into a larger range with a pullback and retest. I'm not planning too far ahead, we go step by step. On the 5-day time frame, we also have a rabbit box set up where I bought spot targeting around 95K. That trade is still open. If price moves lower, I may add, but the strategy itself doesn't require price to go lower. It simply expects price to return to the target. So it's not guaranteed that all lower compounding levels get filled. Now moving to the 3-day time frame, we have a close in about 15 hours. We want to see a close above 69K to flip momentum bullish. For now, it's in decision mode, which makes sense since price is ranging locally. Personally, I would also like to see a 3-day candle close above the last rejection. If that happens, I would aim for a new high. Let's see where it closes. On the 2-day time frame, it's basically the same level, around 69K, where price is currently trading. On the daily time frame, we've seen a nice bounce, and momentum remains bullish as long as Bitcoin is closing above 67.8K. Looking at the daily chart, I would say as long as price stays above the previous low, momentum will remain up. If we get a daily close below that low, then we could see a retest of the lower area again, back into the higher time frame levels where we have a lot of local support. But for now, momentum remains bullish. On the 12-hour time frame, momentum also remains up as long as price is above 67.5K. On the 4-hour time frame, it's still holding strong and would need a close below 68K to turn bearish. On the 1-hour time frame, momentum is at the extremes, which is not bearish as long as it holds there, and structure remains bullish. So overall, what we're seeing is higher time frames are still at the lows or in range mode with some downward pressure. But if this SR level holds, then this area acts as a reset zone and can become the base for a move later. Locally, momentum is up, but for me that's not a signal to enter longs here, because the main entries were already taken from lower levels. However, we do have some important numbers showing up, like the 66K level. So let's now look at the local range chart to see where that fits in. First, I'll mark out a few new levels, like the weekly open and today's average levels. So what do we have now? Our trade is still running. We already took TP to secure the trade and make it risk-free, and we still have a large portion open for higher prices, aiming for the next TP levels, best case at the range high or even higher. Depending on the situation, I will also look to pay myself a bit if price pushes into today's average gain. I would probably take another 5 to 10% off the remaining position. Right now, 63% is still open, and we already have 0.93R secured, so even if the trade gets stopped out, it will still be a winning trade. taking a bit more at the next level would simply increase the overall profit. Anyway, what to look for now? We see price trying to reclaim the SR level we marked out, which also aligns with the yearly fib time chart. If price closes a daily candle here or higher, this level becomes support until proven otherwise. That means I cannot aim for lower prices as long as this level holds. For now, the average loss for today sits below this area. So in case of a rejection, what you want to see is price closing back below this level. If that happens, I would aim back toward the lows and a retest of that area. First, the mid-range, and only if that gets lost would I look for lower levels for new trades. If price holds above this area, I stay patient and wait for the next level to be hit to take profits. Today's average gain would be one such level, but I would only take a small portion there because I'm trying to catch a bigger move. That means taking partial profits in case this turns into a larger range, while still keeping most of the position open for higher levels. Of course, that comes with the risk of getting stopped out, but since the trade is already risk-free, it would still be a win. That's the focus right now, and so far we're managing it well. If we zoom in locally, price is above this area. For me, this is not a trade zone. If price rejects, then I would expect some chop to the downside, similar to what we saw before, just in reverse. It could range here before the next move or even retest the lows. For me, it's important to know my action zones. Price can do whatever it wants in between. If my levels are not hit, I don't care. For a new action, and by that I mean a day trade, I would most likely look for a retrace back to the mid-range. Otherwise, I don't see a reason to jump into a trade right now if you're in a similar position as I am. So the plan stays the same. Lower levels, potential new entries. Higher levels, take profit. Nothing changes. Locally, if price wants to hold this area, you don't want to see it moving back below the monthly open. Wicks below are fine, but a daily close below would open the door for a move back into the lower area. And if that happens, my main level of interest would again be the lows of that area, where we have confluence and structural stops for a potential SFP. Shorts here are not what I'm looking for. I still have my short from higher levels, and I would only consider a new one if price moves back up to the range high. For today, I don't see strong confluence locally. Based on the daily averages, price could reach around 70.5K on the upside, and the average loss sits around 67.5K. For me, it's simply a waiting game. When price reaches the action zones, I'll update as always on Telegram. With this video, you should already be prepared. We've been repeating this scenario for some time now. If you want to learn more or add a strategy to your toolkit, or use a structured journal to go deeper into your trading, feel free to join as long as spots are available. For the next few days, I'll be traveling, so I hope everyone is prepared for the upcoming moves and not surprised or emotional when they happen. For now, we just manage TP and wait. Be ready for bearish sentiment when price hits key time levels. Just understanding that already puts you ahead of most traders. The rest comes with time. You just need to work smarter and harder to outperform the market. With that said, I hope everything is clear. Not much has changed. We just need patience, as the plan is already in progress. Have a great day, and I'll see you in the next one.